Hi there, welcome to Kneppy Invest. Time for a 9-month performance update to 3 portfolios, including the group portfolio. And I have to admit, this was an absolute stellar month for the group portfolio. It was up 20% in the 1 month. So, on the base of $100,000, it grew by $20,000. It went from being in the red at the end of last month to being in the green by nearly 20%. And mostly it was because of one company. So if you have that right company in your portfolio, you will significantly outperform the market. So before we have a look at the performance of these 3 portfolios, first thing I'll do is talk about what these portfolios are. And the second thing I'll do is look at the overall market to see where we are. And I'll look at the monthly chart for the XJO. The three portfolios I'll be looking at in this video is the group portfolio, which is a group of collection of about 25 companies that was selected by viewers of this channel. And the viewers of this channel were asked, pick 3 companies you think will significantly outperform the market over the next 5 years. I collated the results, put together this group portfolio, and it's a completely passive portfolio from the start of the financial year. So no buying, no selling within this portfolio. I'm going to see how this passive strategy will work over a 5-year period. I'm also going to be looking at 2 of my own personal portfolios using different strategy. One of these strategies is one of these portfolios is based off a strategy I've been using since I started investing. That is looking for companies you want to own for the long term, and you will buy and hold as long as possible until you get a sign to sell. Sometimes that sign to sell can be hard to figure out. Now, another portfolio I do have is using a different strategy. This is all based off momentum, sentiment, all looking at the short to medium term. I started investigating this strategy quite a few years ago because of a successful trade and because of reading a lot of books on technical analysis. Initially, I thought it was a lot of hogwash, technical analysis. And then I realized there was a bit of truth to it because in the short to medium term, the movement of share prices is all based off psychology. So technical analysis is based off psychology, and you can read the psychology of the market just by looking at the chart of the company, of the overall market. So I've been using this strategy, testing this strategy. I started seeing how successful this strategy is in the last financial year. It significantly outperformed the market, even though it was a really good year in financial year 21. And even though I did neglect this strategy for a brief period, maybe 3 or 4 months at the end of 2021, I've started to put more time and effort in this strategy, and it is now significantly beating my long-term strategy. So let's have a look at the overall market now just to see what has happened on the XGO, on the Australian markets during March. This is the XGO the monthly chart going all the way back to 2003, almost 20 years of charting here. And the first about third of this chart is just the GFC. And you can see before the GFC, there was a significant rise in the market, and then it just collapsed back to a long-term trend, which is portrayed by this upward sloping blue line. And in fact, that long-term trend has been in place since 1983, and every single time the XGO hits that long-term trend, we do see a bounce. We saw a bounce off the GFC, and we also saw a bounce in the bottom of the COVID-19 financial panic. But since the end of the GFC, the XGO has been trading in this upward channel, and we did see it go below the upwards channel during the COVID-19 financial panic, and that would have been the best time to buy. And I think a lot of people would have been a little bit hesitant to buy at the depths of the GFC or the COVID-19 financial panic, just because they were unsure how low it could go. I did actually have a target, which was 4,000. My target should have been 4,400, which was right on that trend line, but I was being a little bit too cautious. So that was my one mistake during the COVID-19 financial panic. But the XGO has been in this trading channel for about 13 years, apart from that brief time during the COVID-19 financial panic. we did see the SJO hit the top of the trading range back in August of last year. And then that's when we started to see selling. That's when we started to see the SJO come under pressure. And in fact, at one point in time in, was either January, yeah, it was January, we saw the SJO go towards the middle trading range before we started to see a little bit more buying coming in. And right now, with a really good March, in fact, the SJO was up 5.4% in March, from March 4 to April 1. The SJO is now heading back towards the top of the trading range. Now let's have a look at the performance of the group portfolio. But before we have a look at the March performance, let's just go back 1 month ago. And it wasn't looking good for the group portfolio because it was actually down by 1.8% overall since the start of the financial year. Three best performing companies were Lake Resources, Novonix, and BrainChip, and the majority of companies within this portfolio were actually down since the start of financial year. So what has happened since the start of March? And I've already mentioned it, it was an absolutely stellar month for this group portfolio, and the majority of the lifting was done by one company, and that one company should not be a shock to anyone. It was Lake Resources. Return right now 23,583. In fact, the share price has gone from something like, if I remember correctly, 90 cents to $2.31. That was just in March alone. So more than doubled. In fact, you could say double and a half during the month, and it is by far the best performing company in the group portfolio right now at the end of March. The next best performing company is Novonix. Then we have BrainChip, Unity, also have Tower Group. Tower Group also had a pretty good month as well. And then BHP Group is doing really well. And that also includes a dividend, probably the biggest dividend in this list. Yes, it is. So a really good dividend from BHP and Fortescue. But still, the majority of companies within the group portfolio are down since the start of financial year. So it shows you the power of diversification and the power of relying, just all you need is a few companies to really perform well for your overall portfolio to perform well as well. So overall, we went from, or the group portfolio went from being down $1,800 to being up almost $20,000, $19,704. The majority of that is through capital gains, $18,000 through capital gains, also $1,665 in dividends. So the main thing is not just looking at the performance of your portfolio in isolation. You need to have a benchmark to see how you perform against that benchmark. And the benchmark I'm using is the STW, which is an ASX 200 fund. I just want to see how we perform against that, because if we can't beat the benchmark, we should just put our money into ETFs. So at this point in time, the group portfolio is up 19.7% compared to the STW, which is up 7.17%. So almost tripling the benchmark. And that is exactly what we want to see in the performance of our portfolio. And if you have a look at the STW, the capital gains is only 2.7, but the dividends 4.5%. So dividends are very important when it comes to stocks on the Australian market, particularly in the ASX 200. So you should never discount how well some of these companies, or how big some of these companies' dividends are, to how well your portfolio is performing. Now, to my personal long-term portfolio. This is companies I want to own for as long as possible. And really, unlike the group portfolio, I don't have a really big winner like we have seen with Lake Resources, Novonix, and BrainChip. I do have BrainChip in this portfolio, but it is the fifth best performing company. I do have 5 companies that have achieved over $1,000 return. Those are XREF, Ansarada, EnviroSuite, Fiducian, and BrainChip. Also, Sequoia Financial is up $964. And unlike the group portfolio, where the majority of companies are in the red, just slightly the majority of companies are in the red in this personal portfolio. The biggest loser by far is Zip. I'm not sure why I decided to hang on to the shares of Zip. It was obviously moving down, and I think it's almost going to be reaching the bottom sooner or later. Now, I keep telling myself that, but I think that is true. Now, I have made some really good disposals over the past, or since the financial year, but I've been very inactive in this portfolio over the past few months. But I did make one acquisition during the month. That was my very first international company. I bought PayPal, NASDAQ PYPL. And the reason I bought that company at that price was just the valuation of PayPal at that point in time. Compared to historical values, it was actually undervalued. Even if you look previous or prior to the COVID-19 financial panic, PayPal was actually really good value. It is a growing company, and management expect that company to grow fairly significantly over the next 5 years. And I also believe they have the potential to grow quite significantly as well. Now, that was really good timing. I bought PayPal on, I think it was March the 9, and at this point in time, capital gains are about $900 for that company. But there is a currency loss of $121 because you have to take into account the exchange rates between America and Australia. I also have $28,000 of cash to play with because I made a fair bit of disposals of companies that were in profit a few months ago. And I don't see the need to be too active right now. I am looking at potential opportunities overseas, but I don't see many opportunities on the Australian market right now. There are a few companies I am following, a few companies I am actually thinking of transferring from my short-term portfolio to this portfolio, but I am looking right now at opportunities on international markets. There are some potential value, particularly in locations and in markets where we have seen significant decrease in share prices, that sort of thing. I'm really thinking about China. I was thinking about buying into Alibaba, but then the share price rose something like 40% in one day because of something the Chinese government decided to do. Anyway, so I am always actively looking for long-term possibilities, and most of that looking is on overseas markets. Through much of the time since the start of the financial year, this long-term portfolio was significantly beating the overall market, but we have seen it shift. And on the top here, that graph, the orange line is the long-term portfolio, and there were periods during this time over the last, or since the start of financial year, where it was smashing the STW. In fact, at one point, my long-term portfolio was up 20%, but the last few months, last 3 or 4 months, has not been kind. We have seen significant drops in some of the share prices of these companies. And right now, we are trading fairly level to the STW, 6.8%. The STW is up 7.2%. So a little bit disappointing that this portfolio is not performing as well as I hoped. But the other good thing is, because I bought into PayPal, I can now sort of separate the performance of my international holdings, and PayPal has performed really well since I bought into it. So that has lifted the performance or overall performance of this portfolio. I will be looking at disposing of some companies in this portfolio to go to a new strategy. I'm also looking at buying or possibly buying into some ETFs as well to put into this long-term portfolio. So I'm going to do some strategic disposals, some strategic acquisitions over the next few months. I want to get to better quality international companies, not only United States, but also in Europe, China, those sort of places as well. Maybe even Russia, because right now it seems like the Russian companies are really cheap because the Russian market has absolutely tanked. So I'll never discount buying into those sort of companies either. Though my background in investing really started with being a long-term investor, looking for those companies you want to own for the long term, my focus is shifting towards more the short to medium term, looking at momentum, sentiment, trends, that sort of thing. I've become more active using this strategy and this portfolio over the past few months. I was neglecting it for a while, but as I have turned my attention to using this strategy, it has really paid dividends. And I'm not talking about literal dividends, though in saying that this portfolio has received or has given me 545 worth of dividends in the past month. I'm talking about capital gains. We're really seeing the returns in this portfolio take off over the past few months. So because I'm active, I did dispose of the worst performing companies and have bought a similar amount of companies in the past month. I think I disposed of 4 companies, bought 4 companies. I also have $9,000 of cash. I do like to have a little bit of cash on the side to give me a little bit more flexibility. So if I do find an opportunity in the next day or two, I have $9,000 of cash to be able to be deployed straight away. There are some investors, some experts out there who say you should always be fully invested. And I don't understand that sort of strategy, because if you're fully invested and there is a good idea that pops up, you can't deploy any cash. So I always like to have a little bit of cash on hand just to take advantage of possibilities that can just pop up. All the information I am providing you in this video is straight from ShareSite. I do recommend that site if you need to see how your portfolio is performing. Also pretty good for tax reasons as well. Anyway, I've been active in the past month in the short-term portfolio. We have sold 4 companies: Prosper, CSL, Bapcor, and Telstra. I do own CSL in my long-term portfolio. I will maintain a holding in that company as long as possible. And I bought ServiceStream, Aussie Broadband, New Farm, and Macca, and the share prices of all those companies are up since I bought them. So right now, it looks like those trades have been successful at this point in time. But if they turn unsuccessful, I won't hesitate to sell out of those positions, because the whole point of this or using this strategy is to hold on to your winners as long as possible and sell out of your losers, sell out of those companies who did not succeed in the thesis you have devised. So you should always have some sort of thesis behind why you bought into a company using this strategy. And whenever that thesis dies, that's when you sell out of that position. If we look at the overall performance of this short-term portfolio versus the benchmark, there was a period of time from the start of the financial year to around the start of this calendar year where I wasn't really paying attention to this portfolio. And then that really shifted when I decided I needed to pay a little bit more attention to this strategy to see if it can work. And since the start of the financial year, we've seen this portfolio really take off. And right now, we're almost double the STW. That's exactly what I want to see. Majority of the performance of this portfolio is through the capital gains, 11% compared to the STW, which is only up 2.7%. But the STW has 4.5% of dividends compared to this strategy, which only has 2% of dividends. So at this point in time, I'm really happy with the performance of this strategy and this portfolio. I'm going to see if I continue significantly outperforming the market. I want to be at least double the market returns, hopefully triple or even quadruple. If I can get those sort of returns compared to the market, I'll be one happy investor. Now let's have or look at the comparison of the performance of the benchmark, the STW, compared to the group portfolio, the short-term and long-term personal portfolios. So the STW up 6% for the month. So that also includes dividends, capital gains and dividends. So it's gone from 1.2% to 7.2%. So a really good month for the overall market in Australia. A really good stellar March. See if we can continue that over the next few months. So I'm a little bit skeptical it will. The group portfolio went from being negative 1.8% to being positive 19.7%, all because of Lake Resources. A few other companies sprinkled in there had some success, but Lake Resources had an absolutely phenomenal March. And that's why the group portfolio is significantly outperforming the market, almost tripling the returns of the market. The short-term, I'll go to long-term portfolio first. It did improve from the end of March to the end of February to the end of March, up from 3.9% to 6.1%, but really anemic returns for the long-term portfolio. Unlike the short-term portfolio, which went from being up 5.8% to up 13.1%. Not quite as good as the group portfolio, but I'm really liking where that short-term sentiment portfolio is heading. In fact, if you had to ask me, I actually do prefer that sort of strategy over the long-term strategies, simply because I love investing in any company, love finding opportunities. So I bought into South32, Oz Forex Group, 2 companies I would never thought to or never think of buying into or putting into my long-term portfolio. And simple fact is you have a larger array of companies you can invest in. So I really like that sort of strategy, really suits into my personality. And this comes back to a point someone made in one of the comments in one of my videos who said, your only way to invest is for the long term. I absolutely, totally disagree with that. There are many ways many strategies you can use to invest. You have to find the investing strategy that suits you. I get really disappointed, really not upset, but I'm really disappointed with people like Phil Town who say there's only one way to invest. his way. That is the wrong thing to be putting out there. There are many ways to invest. So when you think there's only one way to invest, when you hear someone say there is only one way to invest, ignore that advice. Find your own light. Find what works for you. That's all I have for this video on the 9-month performance of the group portfolio and 2 of my own personal portfolios. Well done to the group. Absolutely beautiful, wonderful March performance. Portfolio is up now about 20%, tripling the overall market or the benchmark, the STW. If you have any questions that I've raised in this video, if you think investing for the long term is the only way to invest, I'd love to hear your opinion. I'd love to absolutely disagree with you. In fact, I'm going to do a video on that question over the next week or so. So if you have any thoughts, any questions, leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.